Hello, this is Cryptolyze. I hope you are well on this Monday, 23 October 2023. We meet today to talk crypto, to talk news, to talk BTC with the acceleration that we experienced last night, this weekend. Big acceleration, big movement, and we come back to it all together. As a reminder, you always have the possibility of having free access to the educational course, which is a 60-hour training course worth €400, which allows you to learn blockchain, crypto, investment, technical analysis, trading, everything to become profitable. Through 130 videos, 400 pages of guides, quizzes to find out where you are in your progress, and all for free. To have access to this lifelong training, simply use the platform of one of our partners. Everything is explained in the comments and descriptions. In terms of news this week, we will inevitably talk about SBF and the FTX trial, which ends on October 26. That's it. We'll have to have a purpose. So it's going to take a little more time as usual. We have the calendar here. We see that we will have to be patient. We will have a week, which will certainly be very heavy, and then we will wait for the judgment for SBF. But that does not prevent the closer the judgment gets for SBF. Further behind, FTX's creditors are in, trying to negotiate their contract. So you're going to tell me, negotiate what? What we call OTC trading, therefore over-the-counter, is people who have accounts in which they have liquidity, which is occupied, which is taken, in which they have not yet received settlement because it has not yet released the funds at the FTX level, and they are in the process of selling their accounts at 50 cents. 50 centimes. It is not the totality of their accounts. It is $1 equals 1.5 centimes. Currently implied the course is in the ideas of recovering 50% of the total amount, rather 60, and therefore there has a premium of 10% in which there would be 60% overall. That is to say that currently I can buy an account at 50 cents on the dollar and recover when the funds are released. 60 cents on the dollar if ever the promises are well assured. Realizing that nothing is guaranteed to recover more. We always have this element which allows us to determine the progress of the price and to know more or less where we really are in terms of the possibility of recovering funds on FTX. In any case, we're going to follow that because I think we should have news soon, at least after the 1 year, or even a little bit at the 1 year level. It would be an important moment for all those who are in FTX. Then, in terms of news, we have some big news that broke recently. One of the big developers of Bitcoin Lightning Network, which is a layer 2 of Bitcoin which allows low-cost and very scalable transactions, one of the lead developers has left. He's not a lead developer exactly, he's a key developer who has been there for a very long time at the project level. And it is above all the reason for his departure which raises questions. That is to say, he spoke and explained that his departure was linked to a flaw, a very big flaw, in the Lightning Network, and that it is a flaw which, in itself, could not be patched only if there was a modification only of BTC to be able to work. And that's one of the reasons for his departure, so he explains that it's not the only one. And what's interesting to see is that he also explains that it's a very big flaw, and that it makes us some time that they are aware, and that unfortunately there is not necessarily any communication around, and that also explains his departure. That's not necessarily positive news for Bitcoin, at least it's layer 2, that's for sure. Will this have an impact on Bitcoin itself? I want to tell you absolutely not. It's really a Lightning Network, but on that, Bitcoin could lose layer 2, which offers it a lot of scalability for monetary transfers. And once again, the question we will ask ourselves is Bitcoin made to have monetary transactions? To stay in monetary transactions, Binance no longer has a credit card, at least for Europeans, of December 20. No more BNB card, no more Binance card, finito. And that, I talked to you about it in Sunday's video, in which I explained to you that Binance is in fact a string of bad news. That the bad news is not only for Binance, but also for Bybit, in which European regulations are really very bad. And it's very complicated to try again. So I think we really have a strong signal here, so whether it's after the card, whether it's after the withdrawal of the use of euros, even if they are in the process of putting it back, that doesn't change the fact that it is complicated. I think that the compliance effort will be even more complicated with the new regulations that are arriving in Europe. I covered everything in Sunday's video. I'll put the link at the end of that video there. And we attack the macro part, in which this week we still have a lot of things. We have the PMIs which will arrive on Tuesday. We will see Powell's speech. Will we have the same reaction as last time? It will be interesting to follow that. Then we will have the very, very important TT3 quarterly GDP in the US, in which we will then end with the consolidated PCE core for September. I think that from Wednesday and Thursday, there will be enough little momentum, relatively few movements. Because on Friday, we don't have much that will fall. On the other hand, we also have other things that are coming out this week. We have the results. Results which are rather good because when we look at the S&P 500 at the level of the different companies, we still have results which are above the average, above the expected. Still, we have an economy which is resilient. Where we said to ourselves, and me first during the latest results, well, at some point it will be complicated to continue to increase its prices to maintain its margin. Well, we see that we are holding up well. We are even holding up very, of course, the results that have been given, and there we are going to have giants who are going to arrive with Tuesday Microsoft. We are going to have Alphabet, therefore Google. We are going to have Visa. We are going to have Coca-Cola. We really have big ones arriving, and so we will have to follow, especially the big ones, of tech to see if they hold up and if we actually have results that are rather positive. On the other hand, what should be noted is that in the companies which have already published, we have results which are positive, yes, but projections into the future which are not necessarily positive, and that is also why we have a market which does not necessarily react positively, notably the S&P 500. We can clearly see that we closed weekly something quite aggressive. We returned to this low range in which we have always this target, a first target which would be in the 4,150, last target which we would look for below the 4,100 for the 1,618 objective of trend continuity. And to know that there this week we risk having a lot of news, and certainly we risk having an S&P 500 which is sinking. We will also have to monitor the results of the NASDAQ because obviously when we are going to have the techs which are going to publish. And if ever it is excessively good, we will have a bullish reaction which will be violent. Is it that it will allow you to breathe a little more and go retest the 4,297? Why not? For me, it is a key level that we will have to monitor if we ever have a form of retest. Indeed, we are going to do that and we no longer need it. So there we can have a retest because there we have a very strong level of imbalance compared to the movement we had this week. Besides, if we go down in one day, we can clearly see that there we indeed have the first levels. We're just going to bring up the exact imbalance here. First, second day, so Thursday, Friday. So there, we could go and retest on a bearish acceleration, then retest this zone and then make a bearish continuity. This would be consistent. Although normally we would tend to break the price more strongly to go and retest potentially here 4,200 before making this retracement, to be followed in any case on the opening of Monday and especially Tuesday, I think, where we will have the start of movement. We continue with oil in which we are opening the week, which is rather in the red. We are paying attention in all cases on the opening of prices. We do not yet have the American session, which is open. So for me, we are in this process here of retracement to make a bullish continuity. The closing of the last weekly above here of this retest zone for me is a signal. It's not yet really validated because the closure is really minimal. That is to say that we really closed slightly above. We did not make a full candle. So we could still have an area of uncertainty. In any case, we must hold this area of 93-94 here. If we ever break, I gave you a presentation in Saturday's video. Same, I'll put the video at the end of this video. Very important of this video because I explained to you that if we arrive in this zone here, it will be really very complicated to manage whether for the USA, whether for Europe, in which we risk entering into a very harsh inflation, and very complicated to manage because oil is not just travel. It is also everything that is production and production costs, which risks hurting. We have already exhausted the notion of pricing power, so companies can hardly increase prices further without igniting inflation, and so at some point we will cut back on what? On the margins. Moreover, what we will have to watch this week will be here, this index which consolidates the 10-year rates on the 2-year rates, in which we see that we are in the process of having an acceleration to find ourselves in the 0%, therefore returning to neutrality, something which should be normal. We should be better paid for 10 years than for 2 years. And there, this acceleration of the 10 years in which we are aiming for the 5%, target moreover that the market is saying to itself that it's complicated to go above that. It's even impossible. It wouldn't surprise me if at a given moment we still have an acceleration and then fall again. That doesn't mean it's very complicated to maintain over the long-term term. And here we are heading towards 0%, which is generally the herald of the start of a recession systematically. When we go back to zero a few months later, we find ourselves in a recession. So here we are going to follow precisely these elements there, especially this week. We will have the real rate of GDP on the TT3 and the TF4. We will start working on the estimation of the TF4. So we still have something important, especially since we also have the VIX, which is starting to rise again. The VIX, which is the volatility index of the SPF 500, which is overall, to put it really simply, the options placed which allow you to hedge if you ever have strong volatility movements. And there we see that we still have an upward acceleration. I tend to monitor the $25 here. When we pass the $25, there we could have such a relatively strong acceleration to get the $40. That would imply that we are an SPF 500 market which would sink violently and strongly with volatility. Very strong. So yes, volatility, but we see it especially at the level of BTC, this volatility. And when we look at the dominance of BTC, we are in the process of consolidating above the 52%, something which is really impressive because it has been a really long time since we had not gone above these levels. The last time we went above after a low zone, it was at least 2018, before having a colossal takeover of dominance, and first acceleration, retracement, second acceleration, distribution, and then bearish question at the level of dominance. Would we be in this cycle again? To see later, in any case, we have elements which are divergent, so this will be continued. In terms of BTC, we are in the process of having an LS, therefore an in-spine lag, on Ishimoku, which is gaining height in which we no longer have anything to stop us at the level here of Kumo. So for me, we is really in this element where we have breathing, which is possible, and upward continuity, which is possible in any case at the level of Ishimoku. The CME tells us that in fact we are really gaining this liquidity with this acceleration that we had this morning, really this morning, very early Monday morning, midnight, 1 at 2, so the same Asian level. It's either Sunday or at 22 or very early Monday morning. We're used to it. It's really been 2 months where we see it almost all weekends, not every weekend, but almost 3 weekends on 4. So we're used to it. We're prepared. We knew we were going to look for this liquidity. We're heading into the top of the range, which is rather classic, and we will analyze after this movement. It is very important to analyze this movement, and you will see that we still have certain elements which are very strong in terms of the upward acceleration that we have. Clearly, we are still heading towards the top of the range. The determining element is, are we going to consolidate the top of the range in which we are going to be located here, or are we going to break to get back up there? I'll explain that to you right towards the end of the video on the different positions, which will be interesting. Nevertheless, in the short term, what is important to see is that at the ONE level, we have a bearish divergence which is very present, which is not validated in delirium, which is very far from being validated in delirium. We have something which is accelerating with good momentum. On the other hand, in ONE, we see that we have signs of running out of steam which are taking place, in particular with the increase in liquidity of this entire zone. There. And there we are retesting the consolidation zone that we had during the last top, in which we indeed have a very strong ranging zone. And I think that we are potentially retesting this ranging zone. What will be decisive is how we will work this zone. Before answering this question, we will take a look at the explanation of this movement. Already several things. We went for liquidity first time, liquidity second time, okay? Then, what drove us? In the last 24 hours, we see that what is it? It's a short squeeze. I explained to you last week that we were preparing a big short squeeze. I didn't think he was going to be this violent, but in any case, we are fueling him. And it pushes hard. We can clearly see here the first, second, third upward accelerations. We liquidated a big part. On the other hand, what is interesting to see is that we are creating a lot of liquidity here, in the long part, which is rather consistent with the movement we are currently having. And besides, we have a movement that is taking place at the level of order flow. So there, it is a movement which is hidden, in which we are in the process of obtaining information. So what is it? Here, we have an open interest which is mostly falling, while we have a price which is rising. So already, first indication, this implies that the leverage part is in the process of being consolidated. This also means that we are arriving in a zone that is complicated to maintain in open interest. For what? Because here we have all the accounts which are short, and we are starting to have a shift in the top traders. That means that we are in the process of short squeezing the majority of the accounts, and that the top traders are in the process of benefit from that. That means that they are not in a form of hedging. They are in a form of trend following in which they are certainly taking profits. We will wait for the profits to be taken. For me, it is not yet present. We will wait for profits to be taken when we potentially arrive in the 31,500, here in the retest of this upper part. There we will certainly see a breakout which will take place, something like that, and there it will be a signal with a drop in open interest. We will have a big signal to put in place. In all cases, the movement is a perpetual movement. It is a movement which is linked to people who are pressing on the shorts, with a lever to be able to catch. In fact, a bearish continuity. This is exactly what we are doing. And so that means that until this part is completed, we will continue to push. And that is exactly what we are seeing. Here I told you that this level of liquidity was interesting. We see that we are taking it. Personally, I won't play there because we're still going to burst levers, okay? And we can clearly see that we have a further strengthening of leverage here in this area, and that we are reaching the top of the range. So the top of the range, what will happen? As long as we do not have a distribution or rejection validation in place, that means that we can potentially accelerate. We can accelerate because people will try to short, and therefore we will find ourselves in a short squeeze again, so we will not put ourselves against it. On the other hand, what I am going to aim for is the following way. I am going to position myself here in this. Go. There it will be for me, in fact, a retest zone in which I will wait here for a bullish acceleration, make a deviation, recover liquidity here, rejection, retest, new rejection. There I will have a signal to make a bearish continuity because we must not be inconsistent and say to ourselves that in this whole part we do not have dollars. So there we have a lot of long-term liquidity which is waiting to be recovered. So it would be coherent to have makes this range dynamic, in which we will retest the 25,000 range before potentially starting to rise again. We are in a range as long as we have not broken upwards or downwards. The other element that I will wait for, if we ever have a bullish acceleration, I could play the breakout with something on a bullish acceleration. Small retest pullback and a big acceleration with a breakoff structure here. There I would have an entry point to follow upward. Afterwards, I admit that here, we will have to ask ourselves several questions. One is that we are in a form of emotion that is complicated to manage. For what? Because we have an upward acceleration. We're going to switch to daily instead so that it's much more visible. Here, we're even going to go weekly. We have had a bullish acceleration for several weeks, exactly last week and this week today, which was mainly driven by fake news. So emotionally, we are carried by a form of false word. Clearly, when I see the comments I have or what is going around on Twitter, we have a feeling of emotion that is happening, saying to ourselves that the bull run is here. And systematically, when we had this upward acceleration, same thing, we had this upward acceleration, we had the same thing, we had this upward acceleration, we had the same thing, except that there, clearly the upward movement is much less than that one, and much less than that one. And there, we have to take a little step back. It's not because we have a form of FOMO which is increasing, because there, we have a narrative which is being created around the ETF, with rumors that are being made, discussions, that is, on the other hand, it's true, these are not rumors. But it is really discussions that are being made between the different entities and the SEC. So yes, we know that the discussions are taking place. We know that at some point it will be validated, and there we are in the process of putting together a narrative on precisely the ETFs. The question what we need to ask ourselves is it interesting to position ourselves now on leverage? I remind you that we are at the top of the range. I remind you that currently we have a macro which is very complicated. I remind you that we do not yet have news of validated ETFs. Do I have any interest in taking a risk in buying at top of the range? I'll tell you no. Currently, I have no interest in going looking for that, other than responding to an emotion of saying to myself that this is it. It's the bull run. The bull run is not prepared here. It is prepared in this area, in this whole part, where I systematically told you that I was in DCA and that we were in the process of buying. So personally, I am covered in this part. I am still in DCA in this area, much less than what I was here. That prevents me from still being in DCA, but I will not buy leverage a position at the top of the range as long as we do not have a signal. Strong signal, which would, for example, be an injection of liquidity. It would not even be the validation of an ETF. For me, it would be an injection of strong liquidity. And if you do not understand that, I invite you to really look the video that I made on Saturday. I'm linking it to you here because it's important to understand the liquidity cycle. And for me, the ETF is an open door. But if no one enters through this door, at that point, absolutely nothing will happen. And we could very well being here in a buy the rumor, sell the news. So we will have to be very careful when we get the news from ETFs, and precisely when we are heading into a zone like that, it would be logical to see a very strong upward acceleration which could take place. Why not go get 34,000 and then have a big dump with false news that could arrive here? So we will always be very careful. I remind you that we have a market that is running out of liquidity, in which we are in a phase of lethargy with a movement that is driven by perpetuals. So that implies that it's not a spot movement. So we're always very careful. We're open to manipulation. So keep your capital. Be very careful. If you are moving long from this part, good for you. Is this a good time to go long? I want to tell you that we are in the top of the range, so technically no, it is not something in which we will look for a long one, and that we will rather look for a shorts, even if currently we are in the process to swallow all the shorts for the moment. Personally, I am not entering into a position until I have other information, and especially an American market which is opening up to see the reaction of the American market to this acceleration. Bullishness of the Asian market. I hope you liked this video. If so, don't forget to leave me a like and a comment. It always makes me very happy, and we'll meet at 13:30 to talk about Matic Polygon's crypto. And so see you at 13:30.